Next one is your types of risk, types of investment risk. So what is the meaning of risk? Whatever the variations which you have been getting with that of your expected return with that of your received return. So what is the difference will be there in between what we are expecting and what are the things we are receiving? The difference is called as your variation. So here always the risk will be measured with the help of standard deviations. We are going to be evaluating the risk with the help of standard deviation. So different types of risk we can see if you look at the classification. First one is your inflation risk, principal risk, credit risk. These are different types of risk which are available in the market. So here, basically, the risk will be categorized into two types of risk, that is systematic risk and unsystematic risk will be there. Basically, in generally, if you are going to classify for the investments, so we can classify into two types of risk, systematic risk and unsystematic risk. Systematic risk is that risk, whatever may be the fluctuations which is happening in the market, if at all any market fluctuation are events, but that fluctuation is going to directly give an influence on your share, on your investment, then that is called as your systematic risk. If any market changes has been happening in the market, that directly is going to give an impact on your returns. That is called as your systematic risk. Example for your systematic risk are your interest rate risk, inflation risk, credit risk. These are all the risks which we have been facing in the market. If at all market has been changing, these are all the risks is going to give an impact on your investment. If at all any changes in the market is not going to give any impact or influence on your return on investments or on your returns, then it is called as your unsystematic risk. So the best, very good example for the unsystematic risk, your financial risk, business risk, and liquidity risk. These are the risks which you are going to face within the organization. So it is not going to have any kind of a relations with the market's indices. But the previous one, they are entirely related with the market indices. So definitely we have to concentrate on the systematic risk and unsystematic risk, which is going to give an impact on your return on investment. So if you look at carefully, they have categorized a certain classification of risk, inflation risk. So if at all any changes, a decline in the real value due to inflation. So if at all any raise in the prices due to the any kind of a market fluctuations, it is going to directly give an impact on the economy as well as and the GDP as well as on the national income. So inflation risk is that risk where it is going to give an impact in the decline and in the real value of your investments. Directly, this inflation risk is going to give a decline in the real value of your investment. Principal risk. Principal means whatever the amount you have been invested, the original investment which you have been invested. So there is a chances that there will be a decline in your capital, whatever the amount you have been invested, either in a diversified portfolio or in a two security portfolio, whatever may be the thing. Directly, it is going to give an on your investment, the initial investment value. Credit risk. The chances of borrowing will default on the obligations. Here, the credit risk may be happen when we are been borrowing any loans from the debtors or any kind of financial institution, any kind of financial services. In that cases, we are going to face this credit risk. Market risk. Directly, any changes is happening in the market, whether that may be a bond, stock market, that be definitely that is going to give an impact on the return on in your investment. Either that may be decrease your risk or sometimes it will increase your risk also. Interest rate risk. So interest rate risk will be vary from the two point of view, whether it will be if you are borrowing any kind of a things, definitely it's going to give an impact on the interest rate risk, or else you have been invested in your securities. In that way also you can be face this kind of a interest rate risk. So regulation risk, this regulation risk could be happen adversely affect the stature of your investment. That is, if at all any changes in the law related activities, if at all any changes in the law related activity, definitely you can be having. Business risk entirely dealing with the within the organization. So definitely whatever the risk which you have been facing within your organizations means particularly the environment of the business or the industry, then that is called as your business risk. Reinvestment risk. If at all you have received any kind of a returns or dividends, whatever the investment you have been invested, or any kind of a coupons, then it will be not reinvested or cannot be reinvested at the same rate. So yield to maturity, then by TM, is it not going to be attained? In that cases, you will be going for the reinvestment risk. That will be arising the reinvestment risk. YTM is nothing but yield to maturity, means how many years you can be expecting that your rate of returns will be coming back in your hands in the form of returns that will be giving your yield to maturity. Exchange rate risk. Exchange rate risk means the name itself is giving description exchange. That is any kind of a variability or fluctuations or changes in your return on securities will be caused by the currency fluctuations. That may be a currency related fluctuation. That's why they have included the exchange rate risk. The currency fluctuation sometimes will be vary in the form of transaction risk or translation risk. Either you want to be translating your one currency to another currency, or you will be transacting from one country to another country. In what way? What way also you can be considered. Especially, it will be dealing with the currency fluctuation. Country risk. Whenever you will be going for the abroad things, whenever you are being involving in international business, and that may be in the form of exporting, importing, licensing, franchising, contract manufacturing, whatever may be the things, in that cases you can arise such kind of a country risk. So valuation risk, definitely it will be dealing with your value of investments where you are being investing. Either you are being investment is your overloaded or underloaded, means that you have been invested your over huge amount or undervalued amount. In that cases you will be going for the valuation risk. Timing risk, so whatever may be the facts, that is at what time you people are going to buy the securities, or at what time you are going to sell the securities, the time where you are been, whatever the things you have been sacrificing right now. See, if at all I have purchased a lot of options by time 12, 15, 20 seconds I have purchased, the lot value is rupees. If at all I'll take the example of 1,000 rupees, if at all it will be within a fraction of seconds, the market fluctuations will be changes. So definitely there will be a timing risk also will be there. This type of a timing risk most probably you will be facing when the speculators will be speculating the market. In the purpose of speculation, this timing risk mostly preferable. The last one is your forced sale risk. The chances that investment liquidity, what is the meaning of liquidity? Where the immediately we have been converting our things into money without delay things. Your marketable security, immediately you are being selling it without losing any kind of a time or without losing any kind of a value, that will be called as your liquidity investments. In that cases, we are going to be arising this forcible risk. So these are the different types of risk you people be arising while you have been investing. But basically, you have been classifying the investments with the help of two classification, that is your systematic risk and unsystematic risk. Got it now? Yes? Fine. Now we are going to moving on to the types of investors. You will be having a different types of investors where a person is going to invest. So what to whom we can call them as an investor? To whom we can call them as an investor. So whenever we want to categorizing our investors, we can categorize an individual as an investor, institution also I can call it as investor, mutual funds, pension funds, endowment funds, insurance companies, banks. These are all the things I can call as a investors. Why? Because it will be dealing with some kind of a risk and returns where we are been getting some kind of a prospect to gains in future with the help of sacrificing something at present. Got it? So individual, the term individual is that individual may be compromising the single largest group. Yeah, the individual may be a single person or a group of person as well, I can say. So here it is entirely dealing with the size of the portfolio where an individual is going to be purchased. So here an individual is a person who is going to be investing in two types of investment. Either he can go for the risk based investment or risk free investment. Risk free investments, he don't want to take any kind of a risk with his investment, that is his principal amount. So simply he wants some risk, so directly he will be preferring for the risk free investment, that is called as a government securities, government bonds, treasury bills, post office savings. Such type of investment he will be choosing, and he will be keeping a coin because he will be having risk free return. So that's why the return is also very less compared to that of other security. Got it? risk risk taker, he is a person who is going to always want to take a risk. Again, when you want to take a risk, I can categorize the investors into different types. Balanced investor, I can say. Aggressive investor, I can say. Conservative investor, I can say. So here, based upon the perception and based upon the thinking level of the investor, they can categorize according to these classification. So here we can based upon the age also we can categorize investors. 25 to 35 means he's a person who will be thinking about the family things, family related activities, so house, vehicles, family related things, educational related things, personal related things, some kind of a. So he is a balanced one, we can say. He's a balanced person. 35 to 45%, he is most probably expecting some kind of a educational plan for his children. So definitely he will be more balanced, and he will most probably concentrating on the marriages and concentrating on the higher education persons also. So based upon the age categorizations, based upon the taking a risk categorizations, we can consider the individual as an investor. Institutions. An institution is also comprising of investors. How means on behalf of an individuals. On behalf of an individual, the institution is going to invest. The very good examples like investing in mutual funds, investing in kind of a deposit that may be recurring deposit, that may be fixed deposit, that may be any kind of a bond, that may be any kind of a debentures. So in any categorization. So if you want to take a mutual funds, direct mutual funds, you can go for the directly you will be approaching and directly you will be categorizing the mutual funds. Sometimes you can go through the third party that will be through the direct through the what is it financial institutions or banks whatever they. So in that cases I can consider the institution as a, one of the investors. Mutual funds, so I can directly go for the direct mutual funds or I can go for the through any kind of a third party. Just now I have said. So what is this mutual fund? Mutual fund is considering a pool of small savings. Means here we are having a small investments in us. I am having only a savings of 1,000 rupees. So how can invest my 1,000 rupees? It is a small investment. So all big companies are offering a huge investments. I can't. So in that cases, with the help of excuse me, with the help of 500 also I can invest. So mutual fund is called as a pool of small investments where between the third party is going to third party is called the portfolio manager. He's a person who is going to concentrate where to invest and how much to invest. Pension funds, with the help of pension funds, not only the public pension funds but also the private pension funds and some kind of a the new government related private pension funds also there is there. So this is also one kind of investments where we can invest. Not only the government related is going to have this kind of a pension related investment advantage, but also the private employees will be getting the advantages of investing in pension funds like the public provident fund investments where the different financial banks and financial institutions are been offering for the individuals. Endowment funds, endowment most probably it will be dealing with kind of a non-profit organization. It's mainly dealing with the non-profit organizations where they are going to be fulfilling their investment objectives with the help of getting some kind of a minimum returns. Mainly, the purpose of these endowment funds is to based upon the trustees charity trust. Non-profit organization. Some of the organization will be there na trustee worth of things, NGOs related things. We can consider those things as the endowment funds. Insurance, nowadays insurance has become one of the topmost investments in the investments. Why? Because of the after the effect of these COVID, most of the people first they have been step ahead to invest in insurance. Why? Because means they don't have any kind of a guarantee towards their health, not even towards their lifespan also. In that cases, that's why most of the investors have come forward to invest in insurance related activities. The previously we used to take it as a lost options for our investment for our portfolio design, but now most of the people take it in ranking it as a second to third proposal for their best investment opportunity. Next, banks. I can invest my investments in banks with the help of opening some kind of RDs and FDs, recurring deposits. So most probably, whenever I will be investors point of view, I will be thinking about the banks. So most probably, Reserve Bank of India is going to play an important role to fix a CRR and SLR. That is nothing but your cash reserve ratio and statutory liquidity ratios. So these are all the classification of your investors. Difference between the speculation and investors and gamblers in the previous class I have explained to you people. Okay, next. In this unit, I'll tell the important questions only. No, I think if I'm not wrong, no problems for you. Problems are not there in your syllabus, if I'm not wrong. Correct, ma? Problems are not there, na? Hello, can anyone? Okay, fine. So first important question you can
Yes,
expect
madam.
in this unit is
Problems
your types of stock exchange. Types of stock exchange. So whenever we have been going for the types of stock exchange, mostly you have people have observed BSC, NSC, you people have observed the stock market will collapse. Stock market has been collapsed today. Stock market has been very much a peak moment. Most of the investors has got profited. So Bombay Stock Exchange and National Stock Exchange. So under this Bombay Stock Exchange and National Stock Exchange, you some companies will be listed under this BSC and NSC. So here the stock market. Can anyone tell me the how the stock market is going to be fluctuate? Stock market, what time? What is the time span that a stock market is going to fluctuate?
Within fraction of seconds also it can fluctuate.
Yet, within a fraction of second, you can expect four changes. The maximum is four changes you can expect.
Yeah.
In a fraction of second due to the high volatility. Whenever the high volatility in the stock market, in a second I can have a fluctuations of four times. That is the a peak and highest fluctuations in the markets when it is having any kind of a high circumstances, high variability in the market. Okay. So BSC and NSC, Bombay Stock Exchange and National Stock Exchange, some of the listed companies will be listed under this BSC and NSC. Okay. So BSC is the oldest stock exchange in Asia which have been established in the year 1875 and it is located in Dalal Street, Mumbai. Okay. So some of the features we can say that about this Bombay Stock Exchange is that here up to 2016 it has a market capitalizations of 154 point crores lakh crores here. So here if you look at, if you can you will get all this information by reading it. I'll say some other important points apart from the syllabus and apart from the things. If you look at how many people have observed that the stock market having a bull and bear market. Bull and bear symbol they will be using. Why? Bull and bear.
Yes. Up and downs.
Why? Can
Instead of
anyone tell
up
me
and
bull
downs.
and bear? Yeah, up and downs only. For the up and downs only. Why they have chosen only the bull and bear? Any reason? Special reason? Why they have not yet chosen a lion?
No idea.
We call the lion is the king of the jungle. Why they have not chosen the lion? They have chosen bull and bear. Why they have not chosen the tiger? Why? No reason. No idea. No one is having any idea.
No, no idea.
No idea. So if you look at raise in the market, whenever how the bull is going to attack, a bull is going to attack from downwards to upward. Is it not? Bull is going to attack from
Yes.
downwards to upwards. So whenever a rise in the market, we call it as a bull market. Means market is raising because from down to up it will be moving. Market is moving from down to up. So that's why we call as a bull market. Bear market. Why it is called as a bear market? How the bear it is going to attack? It will be attacking with his hands from top to bottom. It will be attacked hands on top nunchi bottom. It will attack like this. Na? So whenever there is a fall in the market, we call as a bear market. Got it, ma? Yes. So that's why they have been used this bull and bear as a symbol for the raise and down in the market. Okay, fine. If you look at these all the points, if you read it, you easily you can know. So top listed companies will be there. Under 50 top listed company will be there. So you can invest your BSC and NSC with the pharmaceutical sectors or else with kind of any kind of a commodity related sectors or any kind of a options related sector. So all these are very sensitivity in nature. So the timings for your stock markets will be starting with the 9:30 to 3:30. 9:30 to 3:30 it will be starting. The transactions will be closing to 2:30. The transactions will be closing to 2:30. If at all you want to buy, if at all you want to sell anything in the market at by 2:30, you have to finish. If you are not going to finish it by 2:30, automatically the market is going to close your transaction at the end of the session, at the end of the market, that is 3:24. It will be ending the your transaction. If at all you have not done your buying or selling transaction on that day, if you want to, you have been opted that option, you are not been doing that thing, the automatically the market is going to close your transaction by 3:24. So these are the some basic important points. It will be there in the stock market mechanism. how the trading mechanism is going to be done means with the help of brokerage. Always the brokerage will be playing an important role in broking related activities or in doing any kind of a stock related activity. So most probably most of the investors they will be believing on the brokering. So finding a broker is very important. Finding a broker is very important in the markets. If you look at here, they have mentioned the timings also. They have mentioned the timings also. Some these trading times will be changing some year by year or some years based upon the RBI things. They will be changing these timings in the trading. Okay, so no need to worry. So whatever the things you are been doing, if you want to watch your online trading accounts, it will be having some kind of fee with the help of opening some kind of a demat account and all those things. And you can have a customer related ratings and customer services, and brokerage charges is very much mandatory in intraday trading. Can anyone having any idea about the intraday trading? Intraday trading is nothing but on the same day you are been doing a transaction, both buying and selling. Means you are buying the stock today and you are selling by today itself only. That is called as a intraday trading. Okay, holding period trading means you have been holding for a particular period of time, based upon the market fluctuations you have been selling that things, or else again you are going to buy some other products and giving and adding to that of your existing things. That is holding period trading, and this is your intraday. Intraday means the same day itself only you are going to buy and the same day itself you are going to sell the trading things. So brokerage, while we are choosing any kind of a brokerage, you have to be cautious that how the trading transactions will be done with that of through the brokerage, either that may be a intraday or for the options or any kind of a holding period returns. So this is all about your finding a broker in these things. So what are the disadvantages in your stock market? What are the disadvantage in your stock markets? The most disadvantage, the common problem which have been faced by these in the stock market is just speculation. If you look at, I have given the in the previous class only speculation. Within a fraction of seconds, that advantage who is going to get that advantage is called as a speculators. Example, I said that 12 to 15K have an open a one lot options. 12, 15, 20 seconds if I have opened the lot value is 1000 rupees. Same 12, 15, 35 seconds the lot value may be increase or decrease. So this from 20 seconds to 35 seconds, the time span gap is hardly 10 to 15 seconds. The 10 to 15-second gap advantage is going to take by the speculators, either that may be increasing or decreasing. So that simple fraction of hardly and the short span period time under the simply I'm telling the example. So very keen point things he has to be notice the speculation. So that is called as a high risky one speculating. Why? Because it will be dealing with a high volatility in nature. And next one is your insider trading. So here we can consider this insider trading as your gray market. Why? Because all the transaction related activities things will be there within the organization. So mostly the gray market means already who people will be in the trading related activity will be having a almost all updates related to the market. So definitely whatever the information which you'll be getting, it will be play a very volatilities from the marketer's point of view. Next, oligopolistics. So here, truly competitors. Whenever the competitors has been there in the stock market, will be highly and truly competitive compared to that of other things which have been dominated by the large financial institutions where the big brokers will be included. Next, limited forward trading. Forward trading. What is the meaning of forward trading? Whenever you are been entering into an agreement here and you are been keeping a stipulated periods to finish off that particular mm, contract entry. Forward means within a period of 1 month, within a period of 3 months, 6 months, but it should be less than 1 year. So with that stipulated period of time, you are going to be finish offing the trading contract. But here in the most disadvantage in the forward trading contract is if at all any dispute is going to arise in between the contractor, there should be there will be a no middle person will be there who is going to settle down the disputes. Definitely they have to approach the court of law. So that's why there will be a limited forward trading transactions will be there in the stock market. Next, outdated share trading systems. Sometimes, most probably, the outdated trading systems will be followed in the stock markets, where they will be waiting for the up to till the market update, and where the IPOs have been IPOs have been announcing all the things. So with the availability of these gray markets, we will be getting the outdated share related transactions, and the timing settlements, and the cycle period of these trading accounts, and cycle period of the account related transactions, all are very outdated. And whenever you want to deposit, or whenever you want to invest your investments in the securities, immediately on the spot it is going to be take your investments in, it will be debited from your account. But whenever you want to sell it after the working period of 2 days, after working period of 2 days, some companies will take the cycle of 3 to 4 days or 1 week to get back your returns. So they will be, till now they will be following the outdated trading systems only. And lack of single market, this is a single door window, because we don't have any kind of a communication between the stock market, nothing. So single door window, so that's why there will be a delay in the transaction, there will be a delay in our getting your returns in times, that is receiving dividends in times. And whatever the returns you have been expecting is also very late compared to that of a market fluctuation, all those things. Why? Because of this single window, that is single market అనొచ్చు, లేకుంటే single window market అని అనొచ్చు. Okay, fine. And most probably the difference between the primary market and secondary market and service is also very um, inadequate because of this single window market. Yes. Next is SEBI. SEBI, this is also very important. You can expect the objectives of SEBI or functions of SEBI. You can expect objectives of SEBI or functions of SEBI. So what is this SEBI? Securities and Exchange Board of India, not Security Exchange Board of India. SEBI means Securities and Exchange Board of India. You people, please don't forget to write and. Okay, this SEBI has been introduced and established by the administrative body in April 1988 by the statutory statute under Section 3 of SEBI Act 1992 on 30th January 1992. So here CCI, we can call as a controller of capital issue, was abolished with the view of SEBI as a single agency to look over a capital market. So here we can find a lots of security boards, peoples will be there, and they are having a lots of responsibility and all this. What is the primary motive of these SEBI? What is the primary motive of this SEBI is to ensure that the Indian capital market has to work in a systematic manner and provide the investors with a transparent environment. They have to provide the investors with a transparent environment. If you look at the carefully recently, some of the news has been happening. That most of the people have complained that they are not taking the 10 rupees coin in the market. They are been not at all taking 10 rupees coin in the market. Is it not? So in some of the malls, they will be giving the 10 rupees coins with the change. So mostly most of the people, they are been unaware about the change. They will say, okay, change that maybe 2 rupees coins or 1 rupee coin, they are being considered. But whenever they'll be say, they will observe that there is a 10 rupees coin. But whenever we want to give this 10 rupees coin, buy some things, no company, no stalls or not even a shopper people are been taking. Is it not? So in that cases, the RBI has announced that we can exchange the 10 rupees coins for our transaction for our daily buying and selling things. So all those things has been done. All those things, this transparency has to be done with the publics and investors. All these guidelines has been implemented by the SEBI, so the Security Exchange Board of India. So investors has to be have a provide and have a clear and transparent environment about their investments. So to put in simply way, the primary reason for setting up SEBI is to prevent the malpractices in the capital market of India and to promote the development of the capital market. So this SEBI has the power to regulate the business of stock exchange and other security market and mutual fund registration and regulation of market intermediaries also. Not only from these all those things, but insurance companies also have been how it has to be how it will be dealing with the IRDA. The same thing, the SEBI also have been carried out in all these related transactions and market. So it is responsible. The SEBI has the responsibility to prohibit and regulate the business fraudulent trading, unfair trade practices, insider dealings of stock market. So here You will be having some kind of a periodical report which have been submitted by the SEBI, which is going to be giving a healthy growth of the capital market and protection of the investors. So, what will be the structure of this SEBI? SEBI has different types of hierarchical, which is going to consisting of numbers of departments, which is going to head by the respective things. So, here foreign portfolio investor and custodians, human resource department, information technology, Investments Department, Office of International Affairs, Commodity Derivatives, and National Institution of Securities. Apart from these department heads, the senior management of SEBI also consisting of a board of directors, has been appointed as one chairperson will be nominated by the Union Government of India, two members from Union Finance Minister of India, one member from RBI, and five members has been nominated by the Union Government of India. So the board of SEBI will be consisting of the chairperson, two members from among the official of the central government dealing with the finance, one member from the Reserve Bank, and five members of whom at least three shall be the whole time members to be appointed by the central government. And the chairperson of the SEBI is been appointed by the central government of India. So, what is how the governing body of the SEBI will be there? The governing body of the SEBIs will be stock exchange will be elected by the directors, government nominees, and the public representatives. Rules, bylaws, and regulation of the stock market provided substantial powers to the executive director for maintaining the efficient and smooth day-by-day transactions in the stock market. So these governing body of the stock markets will be consisting of a 30 members, where the member of stock market are going to elect six members of the stock market. They will be electing the six members, and central government nominates more than three members. The board nominates three public representatives. SEBI nominates a person not exceeding three, and stock exchange appoint one executive director. One third of the elected members retire at annual general meeting. So here, the retired members can offer himself if the election is a member serves as a governing body. So sometimes the retiring members also being acting as a uh, serving as a governing body member for the period of 2 years. Okay, so this is a governing body of the SEBI. The very important question you can expect for your final is your objectives of SEBI. The first objective of the SEBI itself to protect the investors' interest in securities. They have to protect the interest of the investor. Promotion of the development of the security market, regulation of the security market, and the matters connected with thereby the incidental thereof, means if at all any kind of a settlement house mechanism will be there, they will be going as a concerned member. So, in keeping with all these objectives, SEBI has set itself a strategic aim, that is strategic objective for each of the four key spheres with the encompasses of SEBI activities. So, what are these? The investors, to the investor, the SEBI strives to assure that their rights are protected. They are enabled to make informed choice and decisions and the market where they have been involving the financial dealings transactions. And it is going to the issuer. The SEBI provides a transparent and efficient market where they are enabled to raise resources at low cost but conduct themselves in accordance with the highest standards of the corporate governance. For the intermediaries, the SEBI render a market which they completely they feel freely and operate in a manner which give the investors and market participants confidence at the market evolution. And they are going to be fair in the entire market, and it will be always remains an appropriate and appropriate effective where the stakeholder is having a confidence levels to invest in the market. With all the strategies in the view, the SEBI has constantly reviewing and reappraising the existing policies and programming, formulating a new policies and regulation in maturing the area. So these are all the certain objectives of the SEBI. Apart from the objectives, you are having a different types of functions related to the SEBI. So we can categorize the functions of SEBI under three categorization, that is proactive functions, development functions, and regulative functions.
Hello, ma'am.
1 minute, ma'am. Yes, ma'am. Functions of SEBI. First, proactive functions, development functions, and regulatory functions. Proactive functions. As the name itself is giving a description and suggestion that this proactive functions is that SEBI is the protects to the interest of the investors. The SEBI main aim is to protect the interest of investors. So that's why this proactive functions has been performs by the SEBI. First, SEBI is going to check the pricing rigging. So, what is the pricing rigging? Means is our stocks are being underpriced or overpriced? Means it will be inflation or depressing things. Means whatever the market has been offering our stock prices, whether they are being overpriced or underpriced, all those things we have to be do. Whenever we want to sell it our securities, whether it has been underpriced or not, it has been underpriced or it has been priced at a reasonable price only. All those things will be evaluated with the help of the pricing rigging by the by the SEBI. Next, it is going to prohibit insider trading. So, as a person, any person which is going to connected with the companies, such as the director, promoters, workers, is called as the insider. So, due to the working in the company, there are sensitive information which affect the prices of the securities. So such information is not available to the people at large, but insiders is going to get the full knowledge by working in such a company. So this is the flaws which will be there with that of insiders tradings. So SEBI is going to be reduce such type of a flaws which will be arising in with these things. So examples, the managers or the director of the company may know the company will issue bonus shares or share things. So this information is going to be then within the organization peoples, but not with that of your things. So next is the SEBI is going to prohibit the fraudulence and unfair trade practices. Always it restricts the companies which makes misleading statements which are likely to induce the sale and purchase of security by any other person. It will educate the investor so that they become able to evaluate the securities and always invest in portfolio securities. It always issue the guidelines to protect the interest of the debenture holders, and it will going to investigate the cases of the insider tradings and have a provision for stiff fine and imprisonment who will be misusing their things and rights, especially for the case of insider fraudulence. And it will be stopped. The SEBI will stop the practices of allotment of preferential shares unrelated to the market prices. So preferential shareholders will be giving the company has been giving a what is it? They will be dividing their capital into a subdividend. So preferential shareholders will be coming forward to buy the shares in the market. So it will be stop any kind of a things allotment will be there in the preferential shares in the market. It will stop the practicing of making the preferential allotment of shares unrelated to market. Related market ఉంటుంది unrelated market కూడా ఉంటుంది. That may be with the help of shares and that may be with the help of allotment of shares. And development functions. If you look at the development function categorizations, it will perform by the SEBI. It promotes training of intermediaries of the security markets. It promotes the training of the intermediate of the securities markets. It try to promote activity of stock exchange by adopting the flexibility and adaptability way. It permit internet trading through the registered stockbrokers. And SEBI has made underwriting options to reduce the cost of issue. And even IPOs of primary market is permitted through the stock market. The next function is your regulatory function. Regulatory function is going to be dealing with the activities of the stock markets where certain set of rules and regulations and code of conduct where the intermediaries such as the merchant bankers, brokers, underwriters, all these things will be framed under this. And these intermediates have been brought under the regulatory preview, and the private placement has been made more restrictive. SEBI is going to register and regulate the working of the stockbrokers, share price agents, trustees, all those things. And it is going to register and regulate the working of the mutual funds, regulates the power of companies, and conducts inquiries and audits on the stock exchange. So these are the regulative functions of the SEBI. Apart from these development, regulatory, and your things, it will perform the some other functions also. Other functions are your working of the stockbroker, share transfer agents, portfolio manager, investment advisors, such as the intermediaries. All those things also been had done by the SEBI only, and it is also going to perform the functions of registering and regulating the working of the depository custodians and registrations of the working of the venture capital financings, collective investments of schemes, promoting the self-regulatory organizations, and it will be giving information for undertaking inspection, conducting inquiries, auditings for self-regulatory organizations, and it is also going to record of any kind of a banking and authority of the establishing a constitute institutions for their investigations or inquiry purpose for any kind of a board, and conducting research in any matters which is been described in with the form of institution, agencies, banks, and all those things. So apart from these, it also can perform as kind of a functions. So these functions also you can expect for your final question, final mark. How many people have joined? Only three members, huh? Sangeeta, Santu, Sriman Narayana. Only three people have joined.
Yes, but yes,
Only three members. Regularly, you will join only three. Yesterday also you have joined
yes,
only three because
yes, like that only.
We were there, ma'am, yesterday
okay,
also.
okay. The only three were there. Means I have to wait for some other people's mean unnecessarily we are wasting our time. For you people, no problems.
No,
Only theory is there.
yeah,
Okay.
no, problems are
Okay,
also there
only theory.
in SAP. No,
SAPM.
no, no, madam, we have problems also. Mm.
In which lesson? Which unit you are having
No,
problems?
I think after middle of the portion, I think in the mail,
No, no, no. I have
I'll check
yesterday
it
I have
and
go through with the syllabus. Actually, security analysis and portfolio management is entirely a problematic part. But whenever I've observed your syllabus, so it will be dealing with the only theory part.
we'll check it.
Mm. Security market analysis, risk and return. For risk and returns, you will have a problems, but with your
Yes,
syllabus, I don't
yes,
think so. They have again valuation of common stock also is a problematic, but for you people, they have given only theoretical part. Fundamental and technical analysis definition by entirely theory part. Portfolio theory, portfolio analysis also you can have problems. Single index model you can have a problem for these, but they have given only the theory part. That's why I'm saying portfolio evaluation, portfolio revision, institute. These are all the what is that theory part. Risk and return you can have problem. Valuation of common stock you can have a problem. Valuation of fixed income security you can have a problem. But I have observed only theory part they have been included for you. I'm also happy that at least you have this time I got some problematic. Instead of murmuring and explaining theory continuously, it will be quite difficult to you people to listen also. If at all it's problem means easy to and some you'll show some interest to listen. Any doubts, ma? So that's it for today's class, ma. If at all any doubts, you can ask. You can ask any doubt.
It's okay, madam. Thank you.
If no doubts, you can leave the class.
Yeah. Thank you, madam. Thank you.
Thank you, ma'am.
Thank you, ma'am.
Okay, ma'am. Okay, ma'am.